A good time to welcome in, a market expert, market veteran as well, Manish Chokhani, Director Enam Holdings, who joins us on the show. Hi, Mr. Chokhani. Good afternoon, and good to see you in. It's always a pleasure to talk to you, sir. You've been a friend, to the channel, and it's been great interacting with you over the last many years, and obviously CNBC TV18 even before I came on board. Tell us how do you feel today, first, about our 26 years.
Well, thanks for having me, Nigel, and congratulations on 26 years. I'm looking at you, looking young and handsome, and I can only think back to once upon a time I was like that too. So thanks for reminding me of how one looked when one was much younger. But I would like to say, though, that, there are few institutions in India which have stood the test of time and kept the trust of every citizen going. Our army being, of course, right on top over there. And there's so many institutions, the Election Commission. But in that list, I would like to add the capital markets, which are always on and always functioning and always helping people to get wealthier as time goes by. And like the famous old saying said, that you can, if you want to feed a man, give him a fish. But you want to feed him for a lifetime, then you teach him how to fish. Right. And in that context, the work that CNBC and others of your profession have been doing is just simply outstanding to actually bring the capital markets and wealth creation to every citizen of India and help them participate in this incredible wealth creation journey. So thank you for that.
All right, that's heartening to hear, Mr. Chokhani, and thank you for those words as well. Before I joined CNBC TV18, I obviously was following you, and thanks to CNBC TV18, the brand, that I get to interact with you more often as well. That said, we are celebrating our 26 years, but the market's a little bit subdued today. What are you making of the current market setup? It's a little bit worrying because we had a pretty good GDP print. The nominal number obviously was still in high single digits, which is a bit of a worry. But the RBI has pivoted. Growth focus is what they're talking about. For the time being, the market is ignoring any kind of good news. How are you feeling about the Indian markets?
Nigel, it's not a sort of T20 game in a sense. And I sometimes laugh and joke with my colleagues that I belong to the sort of earlier generation which played test matches and where victory was decided over 5 days. And not as, you have in T20, if you lose 5 overs of the T20, you are out of the game. So that's not the case with, when you're investing. You have to take a longer term view of businesses that you're owning and people that you're backing. And occasionally, if you get ahead of yourself, like we did, I think in September 24, when the valuations were completely off the charts, we spent a year kind of consolidating and still hoping for this growth to come back. But when you see a single digit GDP print and RBI has to pivot towards growth, it's telling you that there's a challenge. And while all of us participants remain optimistic and hopeful about our earnings recovery, it's also a fact that if inflation remains, this 2-3% and nominal growth remains 2-3%, then even getting to a 15% type headline earning growth is not kind of in the bag. And a market still trading, north of 20. And again, the challenge that I know you'll ask me is, at what point do foreign investors come back and so on and so forth? The reality is, look, everyone is here chasing growth and a higher rate of return. So people happily will buy, Zomato or a lot of even the QSR type companies at 100 times forward on 27 earnings. But they don't want to buy a 5P multiple, PSU Bank, for example. So it's always growth in context of valuation that one has to think about. And our market needs to digest that a bit, that we are ahead of ourselves in many pockets of the market.
Manish, hi, afternoon, this is Rima here. So we'll come to the pockets where you see some overvaluation still, because it's been a long period of consolidation, 14 months for our markets to get to their all-time high levels. But before that, your own verdict and view of the global markets. Do you think this AI tech momentum continues into 2026? And if that is the case, will India continue to underperform emerging markets, say Korea, Taiwan, China, which is seen as AI plays? What is your top-down view for the global markets?
So thanks for that, Rima. That I think the AI reality is a bit like what we experienced, in fact, when your channel started, that the 99 and 2000 period where it was complete euphoria on the emergence of the internet. And it was the telecom companies which were building the backbone. And you had all these global crossings and people like that who are, going hammer and tongs at building out the infrastructure. At a certain point, the market just pivoted and said, the capex doesn't justify the returns that are going to come out of this space. And in fact, I may be off by a few months, but I don't think the Nasdaq came back to its 2001 peak until 2013. So it's not a 3, 4, 5-month phenomena. It often takes decades for excesses of valuation to get corrected. Even our most famous company, Infosys, which peaked out in 2001, I don't think took out that previous peak for the next decade. And there are a number of places where, in the US also, where these 5 or 6 companies have taken out the bulk of valuation for that market. They've in fact been underperforming emerging markets as well as precious metals. And it's showing some sort of a regime change, that there is inflationary expectation in the developed Western world. And that inflation therefore will show up in terms of higher prices for commodities and increasingly to things like gold and silver and uranium and copper and so on and so forth. Plus emerging markets, excluding India, have already started outperforming last year, and that trend is going to continue. So India needs to correct a bit for its excesses, I guess, on valuation, and also discover our mojo and what's our next big sort of profit opportunity, which you guys are grappling with. Because in the absence of creating our own tech and our own brands and our own way to create the next burst of external businesses, we're sort of trapped in a sort of low growth, only a market share internal grabbing kind of exercise. So we will probably tread water for a while.
But just a simple answer. Do you think we are in an AI bubble? This setup is similar to 1999, 2000, because what followed was the dot-com bust. Are we there yet or not?
Yeah, so, like I said, it's similar to that period where internet companies, of course, continue to do well. It was the valuations which suffered. And again, it seems to me very strange that someone would pay, a $5 trillion valuation for what is essentially, essentially it's a capital goods stock, and don't hold me to that exact term, that if you're buying chips, which will effectively become degraded in 3, 4, 5 years, and that capex cycle can't continue at this pace, plus others like Google and all have come into the, the game as well. And the craziness which is going on with the OpenAI valuations. So valuations is really bubble-like. And typically what happens is demand suddenly, everyone wakes up at the same time and says, we're spending too much. So what looks like justified on current earnings not being excessive, people often point out that there are 25, 30 multiple stocks, but these are predicated on that level of earnings coming through. And typically what happens is that these earnings then don't come through, and stocks then typically correct, as much as 50, 60%. From where it takes a very long period to then, come back to the previous high. So I do think while AI is here and it's a transformational thing for all of us, and we'll all be living in that reality in the next 3, 4, 5 years, very much like the way the internet transformed our lives, it transformed our businesses as well. The same thing will hold true for AI, but not necessarily for stock prices of a lot of these AI companies. And again, to take that format forward, it were people who were users of the internet, for example, financial companies like ours, or healthcare companies, or retail companies, which will be big beneficiaries of this AI boom. And the way to play AI is therefore eventually to go to the businesses that benefit from that, serving consumers, rather than necessarily those who are, the providers of capital. Again, think of it in the Indian context that maybe Jio made a lot of investments to build out the broadband network for India, and it kept India going during COVID. But the people who benefited from it was not Jio in that sense, in terms of the way they made the ROI. But it gave rise to people like Zerodha and Grow, or indeed Zomato and the others. So you need to be thinking in terms of second derivative, that where is this ball going towards? Let me pause on that.
All right, Mr. Chokhani, if you had to give us a couple of themes, you're obviously highlighting that there has to be some bit of a corrective phase that could continue in the near term because of the valuations, because growth is not really catching up, and maybe earnings, as you mentioned the last time around, you cautioned us, maybe the street is a little bit too optimistic. But you have to name a couple of themes that still look well placed, maybe post the recent correction in a lot of those sectors, whether it's EMS, renewables, defense, all through the last 12, 18 months or so, saw a lot of interest. And they've fallen off the cliff, actually, a lot of stocks out there. But in terms of themes that you still like, what would they be?
So, Nigel, I buy things bottom up, and it's not really thematic. When things become popular, actually, they tend to go to an excess. And like Dr. Mark Faber used to very famously say, at the beginning of a cycle, the entrepreneur has the vision and the investor has the money. And by the end of the cycle, the entrepreneur has taken away the money and the investor is left with the vision. And a lot of that is happening now, as you see, including companies from overseas selling down their stakes, Indian promoters selling down their stakes, private equity selling down their stakes. And really, Indian retail has been lapping it up by way of the massive inflows that one has been having. And even professional fund managers have been struggling to justify what they are buying at the valuations they are, and taking cover in the fact that they have no choice but to deploy capital. So the unloved segments, when you go and invest over there, for example, I could mention PSU banks as possibly one example. The finance minister herself has said that her attention is going to be a lot more on privatization now. We also know that this whole trade shifting away from tech to hard assets is a decadal trade which will take place. You've seen the performance last year of gold, silver. Already it's happened with uranium, already zooming on copper and the others. So that's a trade which is taking place as well. And they're starting with, well, not exactly depressed and low valuation, but relative to where the rest of the market is, they may look very, very cheap. And I have spoken in the past about you win when you get asymmetrical bets. And if you think in terms of, is this a 5 PE stock 5 years out? So if you can't look out till, say, 2030, and you can't predict earnings of the company, you have no business buying it. But if it looks like it could be a 5 PE stock by 2030 based on what price you're paying today, the odds are that you'll reach a 15 to 25 multiple by that time, which means you make 3 to 5 times your money, which is a reasonable rate of return to make in a 5-year time span. So there are enough things to do. I don't mean to say the entire market is overpriced, but when you're buying stocks at 50 and 100 Ps, your execution has to go completely right, and your macro has to stay completely right for you to make money. And being a value guy, it's been harder for us, to hold on to stocks which we bought early, but we can't hold on till they go to 100. So we are rotating more towards what I call the value side of the market.
Manish, great chatting with you. Thank you very much for joining in. But the point is well taken that many stocks still today are priced to perfection in India.